U.S. citizens are required to file a U.S. income tax return regardless of where they live. Canada taxes based on residency. A U.S. citizen resident in Canada is subject to filing both a Canadian and U.S. income tax return every year, but typically is not subject to double taxation based on the Canada-U.S. tax treaty, rules surrounding income sourcing, and foreign tax credits.
When giving income tax advice to a foreign-based business that is considering expansion into Canada, it's important that we determine whether or not the activities carried on in Canada will be considered a permanent establishment as defined in the relevant income tax treaty. If they do have a permanent establishment in Canada, they will be subject to Canadian income tax, and careful consideration should be given to matters such as whether they should incorporate here, establishing appropriate financial structures, and cross-border charges and the related transfer pricing issues. No matter the answer to the PE question, the foreign-based business may have Canadian reporting and withholding tax obligations that must also be understood and adhered to. Failure to adhere to these may subject the corporation to significant costs and penalties. Lastly, the company's employees. There's a common misconception that if the employee spends less than 183 days here, they will not be subject to Canadian tax. That's clearly not the case, and many unpleasant surprises have come up. And if the employee feels that their own situation is not being considered and properly addressed, they may be spending more time thinking about that and less time thinking about your business.